Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar for Tuesday, March the 13th, 2012. Well, a fairly large black body candle today, and a candle that's failed to change the trend. Previous day's trading we had a candle that made a lower high and a lower low that found support at the top of the cloud. Today we have a candle that's made a higher high but a lower low. That's quite a volatile trading day where the buyers were strong enough to take out the high of the previous trading day. But looking at the shadow on the top of this candle, they lost commitment as they tested the resistance area at 131.96. We also had the sellers strong enough to take out the low of the previous trading day, but they also lost commitment as the market tested around the 130.79 level and at the top of the cloud. We have a black body candle which represents the sellers making net bearish progress as opposed to the buyers making net bullish progress on the previous day's trading. So that's quite significant. It does suggest that there will be continuation of the trend to the downside. Having said that, however, we do have strong support within the cloud, and we can see that from the shadow that I've just mentioned previously that there was upside price rejection and support within the cloud, and that area extends only down to 130.49, 130.50 at the moment, and we have a very small amount of cloud, and that's the thing with the cloud, it's a dynamic area, and the amount of support that it's now offering to the market is only a very small amount. So we could have a technical breakout down below the bottom of the cloud with a bearish signal in the long-term time frame with the Ichimoku charts if we do see continued downside momentum. But there is some decent support down below at 130.25 and then down to 129.68. In terms of Ichimoku, we have closed just within the cloud, and technically the market is neutral in big picture terms, and the market is bearish in the medium and long term time frames by trading below the Kijun-sen and the Tenkan-sen. We have had a crossover of the Tenkan-sen below the Kijun-sen, and that represents a sell signal with Ichimoku charts, but it's only a fairly weak signal because it's occurred above the cloud. If it had occurred below the cloud, that would be the strongest signal. So for tomorrow's trading, if we are going to see continued downside momentum, then obviously we should look to the bottom of the cloud around the 130.40 level and then down to the support level at 130.25. But we still could see the market change trend to the upside or test it to higher levels. The top of the cloud will hold as resistance now to around 130.87. And there is strong resistance up to 131.45 and 131.96. But the bears have taken control of this market. Strong potential for the market to test slightly lower. Next, moving to the Aussie dollar, US dollar, and here we see in bar chart terms an inside day. That's a bar where we have a lower high but a higher low, and it means that the sellers were not able to continue the trend down technically. They weren't able to take at the previous low, which says something about the lack of downside momentum that the sellers had. They didn't have the commitment to take the market lower, so that could be significant. But by the same token, the buyers weren't strong enough to take out the previous high to establish a new trend. So technically the previous downtrend that was established yesterday is in force. But there is indecision in the market, and that's what inside bars highlight. We also have a white body candle day today in contrast to the previous black body, and the white body suggests that the buyers have made net bullish progress as opposed to the sellers on the previous day making bearish progress. So that could be quite significant. And the buyers have managed to close the market up towards the high, so they've closed with control of this market for the trading day. If we look at the bottom of the body of the candle, we do have a larger shadow on the bottom as the market tested below the 105 level, and that's an area where we've had previous support in this market within the last week or so. And for yesterday's trading, the market tested down below there, and we found buyers coming back in, the sellers losing commitment, and for today's trading. So that's a very, very important level for tomorrow's trading if the trend does attempt to continue down. We have had the market close just above the top of the cloud, so technically the market is bullish in the long-term time frame, but really we're so close to the cloud that it's really quite a neutral market. In candlestick terms as well, we do have a potential Japanese candlestick reversal pattern. It's a harami type pattern. We have the downtrend. Here we have the body of the candle within the body of the previous candle, and a bearish candle previously and a bullish candle for today. So there is potential for a change of trend, and we would require confirmation. So that would be a candle that makes a higher high and a higher low. The market will need to take out the resistance of it at the top of the cloud. If we do, we'll begin trading up from here. We can see this candle as it's developing. The support and resistance offered by the cloud is dynamic, and that level has moved up to 105.77 roughly. Above there we do have strong resistance at 106, extending all the way up through this zone to roughly 107, so a very large area of resistance. In terms of the medium and longer term time frame, the market is bearish by trading down below the Kijun-sen and Tenkan-sen. That's the pink line and the green line here, and the Kijun-sen is pointing flat, and it wouldn't surprise to see the market be attracted back up towards that price action. It happens very often when we have a flat Kijun-sen, so even more important to watch the high of the current candle for confirmation of that candlestick reversal pattern. So for tomorrow's trading, obviously important area is around the top of the cloud and the high of the previous candle and the 106 level, but also watch down around the lows here around the 105 level for a test. If we do see a bearish close below, we could see the market trade down to 104.50. Next, moving to the US dollar Japanese yen, and here we see a very, very bullish market. Today's trading, we had a very large white body candle. The market was able to take out the previous low. The market had been set up for a potential change of trend, but we haven't seen a candle that's established a lower high and lower low. We have in bar chart terms an outside day and quite a bullish candle. We have a candle where the range has completely engulfed the range of the previous day, so very, very bullish activity with the market closing up towards the high. The buyers have taken strong control of this market and showed some very strong commitment throughout the trading day. They did lose some commitment as they were trading within this zone that I've highlighted previously with this yellow area. We can see the shadow on the bottom of the candle, and it was an area where the sellers lost commitment for the previous day's trading as well. The market took out this 82.79 level and the 83 level of resistance, but failed to close up above the 83 level, so that could be important. Today's trading, we have the market quite bullish once again. This candle is not complete yet, but it's looking as though we could trade up above the 83 and close above there. But if we do see the market close down below and perhaps below 82.79, there could be potential for a first time frame change of trend. In terms of Ichimoku, the market's bullish in all three timeframes by trading above the cloud, the Kijun-sen and the Tenkan-sen, and the Chikou span is confirming the very bullish activity that we're seeing in the market at the moment. If the market does continue trending up, then obviously 83.28 is important for a test above there, and certainly there isn't any major resistance until the market trades up to 84.